Welcome back to the channel. Today, we're diving into the latest Iraqi dinar news with insights from Bobby King, reporting straight from Iraq. We'll be breaking down the latest market trends, including the recent decline in Iraq's stock market, what's causing it, what it means for investors, and most importantly, is there hope beyond the numbers? If you find this content valuable, don't forget to like, subscribe, and support the channel. It helps me bring you the latest updates straight from Iraq. Let's get into it. In a week that saw Iraq's stock market record over 9 billion dinars in traded shares, investors were met with a paradox, staggering numbers, yet a market that trended downward. The Iraq Stock Exchange announced on Thursday that across 5 trading sessions in the third week of February 2025, more than 8 billion shares changed hands, a massive volume. However, both the ISX 60 and ISX 15 indices slipped, raising concerns about the market's immediate direction. At first glance, the numbers are impressive. Billions of dinars moving through the economy should signal strength, right? But a closer look reveals a stark contrast. Despite the high trade volume, investor confidence remains fragile. The ISX 60 index, which tracks the broader market, opened the week at 1,065.06 points but closed at 1,056.79, a 0.78% drop. The ISX 15, which focuses on the top 15 companies, showed an even sharper decline of 1.12%, slipping from 1150.68 to 1137.97 points. So, why the contradiction? Why is there so much activity, yet falling indices? And more importantly, is there still hope for Iraq's financial future? A stock market caught between fear and optimism. Iraq's economy has long been a reflection of its turbulent past and uncertain future. Unlike mature markets where stock indices move based on predictable economic trends, the ISX is heavily influenced by geopolitical shifts, investor sentiment, and government policies. For years, Iraq has struggled to attract both domestic and foreign investment, largely due to instability. The war against ISIS, political corruption, and the global economic shifts caused by fluctuating oil prices have made investors cautious. However, this week's numbers tell a deeper story, one of a market that refuses to die, even in the face of adversity. Billions in trades, but who's buying and selling? The staggering 9 billion dinars in transactions indicate a lively market, but there's a catch. Much of this trading activity comes from large institutional investors and government-linked entities rather than a diverse group of participants. Small investors, the backbone of a truly thriving stock market, remain hesitant. This lack of widespread investor confidence is one reason why the market continues to slip. When only a few major players control most of the market movement, volatility increases. A single large sell-off can push the entire market downward, as seen this past week. However, the fact that billions are still moving through the ISX suggests that at least some investors still see potential in Iraq's economy. They are not pulling out completely, but rather adjusting their strategies, possibly in anticipation of upcoming government reforms or economic shifts. The hope beyond the fall. Despite the slight declines in the indices, Iraq's stock market is still standing. This in itself is a remarkable achievement given the country's history of conflict, financial crises, and political instability. The fact that investors are still engaged means there is a foundation to build upon. Moreover, Iraq's economy is at a turning point. The government has been pushing for diversification beyond oil, and there is increasing interest in technology, banking, and infrastructure sectors. If Iraq can successfully modernize its financial institutions and encourage more transparency, the ISX could see a strong rebound. Another reason for hope is Iraq's untapped potential in foreign investment. The Middle East is shifting, with countries like Saudi Arabia and the UAE aggressively pursuing financial and technological advancements. Iraq has the resources, the workforce, and the geographical advantage to position itself as a serious contender, if it plays its cards right. What needs to happen next? For Iraq's stock market to truly thrive, several key changes must take place. Increased transparency. Investors need clearer regulations and assurances against corruption. Confidence grows when markets operate under fair and predictable rules. Attracting foreign investors. Iraq must open up its economy further, offering incentives to international businesses and reducing bureaucratic hurdles. Encouraging small investors. More Iraqis need to participate in the stock market. This requires education, better accessibility, and a cultural shift towards long-term investing. Economic diversification. Moving beyond oil dependency is crucial. The tech, banking, and real estate sectors need more attention. Political stability. Without a stable political environment, no amount of financial reform will sustain long-term market growth. A market that refuses to die. While the ISX saw a small decline this past week, the real story isn't in the falling indices. It's in the billions of dinars still circulating, the traders who haven't given up, and the potential that remains untapped. Iraq's stock market is at a crossroads. It can either continue its cycle of brief surges followed by setbacks, or it can embrace reform, attract new investors, and position itself as a powerhouse in the region. The choice is clear. Now, all that's